you think about having a cell phone or driving a car or having certain amenities in your life, self-storage is everywhere now. So people kind of use it as part of their
Yeah.
normal journey, right? Like they know that they can, well, I could just put my stuff in storage for a little while, or I'll just rent a storage unit.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, welcome back to the show. I am your host, Todd Dexheimer, and excited to have Ryan Gibson with me. Ryan, how are you doing today?
I'm doing great. How are things with you?
Man, couldn't be better. Ryan, a little bit about him. He's the president and chief investment officer, co-founder of Spartan Investment Group, or SIG. Man, you guys have done a lot, and I've been really impressed with your growth. So you guys are self-storage and self-storage only, and you guys have organized. I think you said you've done over $1 billion in
Yeah, and
assets,
transactions.
in
Yeah, yeah,
transactions.
yeah.
That's pretty impressive. So uh, I'll let you just keep on going. So give our listeners just a bit more about your background. We'll dive in.
Yeah, I think it's a very unusual background. The story is I was actually an airline pilot for over almost 20 years.
Mm,
And it's kind of fun to sit back and, do this real estate thing and have a whole another career that you've had in your life and had a change successfully. So, we started Spartan almost 15 years ago now. And I started it in my layovers, with my business partner, Scott, who you've had on the show. But my story goes all the way back to, high school when I was selling knives, Cutco knives, and saving up for flight training. And when I was a senior in high school, I was flying airplanes. And when I was shortly after college, I was 21 years old and I was an airline pilot.
mm,
And, I think I couldn't fight off the entrepreneurial spirit that I had deep down inside, which led me to real estate. And then I just started, doing real estate, single family homes and flips and things like that. And, I kind of got to get into real estate for the reason that everybody gets into real estate, which is, passive income and
yeah.
building wealth. And what I realized is that these little, I was making good money at the airlines as a pilot, but these like single family homes I was buying and the rentals were, generating a good ROI as a percentage, but they were a terrible ROI in my life. And I just started to run into a lot of pilots. I flew with a lot of pilots that really wanted to get into real estate, but really didn't want to do the work that I was doing.
Yeah. Yeah, for
And
sure.
yeah, and so, I met Scott and we said, hey, let's create a company that helps, high income earners invest passively into real estate. And, Scott and I had dabbled in residential real estate developments and we're like, we don't want to do this anymore. We want to pick an asset class that is easy to own, evict, easy to maintain. And, just had a good track record. So we started focus on self-storage, which we kind of made that pivot about 10 years ago now. And we've built up this awesome portfolio of, like I said, we've done, nearly a billion or just over a billion in transactions and, have 90 stores now across 7.5 million square feet and have really scaled the operation. We do all of our own property management. We have a national brand called Free Up Storage and then a construction company that builds, 8 to 10 projects a year now, whether it be for us or for other operators and just having a great time. A lot of airline pilots invest in our projects just because of my relationship with them. And then I also have a podcast called Passive Income Pilots that focuses on airline pilots.
Mm,
Because I think there's we have the white coat investor and passive income MD and about a lot of stuff for doctors,
a
but we
lot of
don't
stuff
have a
for
lot of stuff.
doctors.
Yeah, but not pilots. Like literally, we're the only podcast out there that
Mm,
kind of caters to airline pilots. And that's kind of my story. And I have a couple of kids and really enjoy flying for fun now. I retired from the airlines almost 5 years ago, and just really just enjoy flying small planes and taking my kids to really fun destinations and that.
yeah.
Uh,
You,
yeah.
you still fly quite a bit, or as much as you
Oh,
can.
as much as I can. Yeah. And
Yeah.
I backcountry pilot now,
Mm,
flying to like remote grass strips and
oh,
camping
cool.
destinations. And yeah, over Memorial Day weekend, a few weekends ago, we took the plane down to a ranch in Southwest Idaho, and flew down a
Wow.
canyon, landed on a grass runway, and set up shop for a couple of days. Took the kids fishing, and just really had a good time. Just went on hikes. Looked for went walking in the river, and
That
and
sounds
it's cool.
amazing.
Yeah, yeah. So that's the kind of flying I enjoy now more than the airline flying. But the airline flying gig was great. It was a great job. Was able to build a business out of it, and grateful to have that experience, and grateful to have 10,000 hours behind under my belt flying. So now I'm super safe with my family. So very
Yeah.
fun.
What do you say to that, airline pilot or high income earner that they know the power of real estate. They want to be in real estate. They've heard about it, but they're like, man, I don't have time to go find a duplex or, a single family home and then fix it up and rent it out. And I don't want to deal with all that. Like, what's your advice to that type of person?
Yeah, I think I like to bucket your net worth into four buckets. And so I think as airline pilots, like if we think about some of the issues that we're going to have, right? I mean, airline pilots are making great income, right? They're usually making a half a million, maybe sometimes even upwards as $1 million a year. And what's cool about being an airline pilot is that most of the major airlines now are going to have a defined contribution of about 18 to 20%,
Hmm.
meaning that if you're making 300 grand, you've maxed out your 401k
Yeah.
without the airlines contributing any money. And so your retirement plan is set. It's literally on autopilot because the airline is going to put money in there regardless, and they're going to fill up that $60,000 a year bucket, and you're going to have plenty of market exposure. So by the time you retire, you're going to have millions of dollars in your 401k, and as we all know, as high net worth or high income earners, putting money into a 401k, when you retire, you basically have to liquidate investments to generate income
Right.
to live, right?
Right.
So you fill up the air in the balloon, right? You fill up this retirement account, and then when you retire, you sort of have to deflate this balloon, and then hopefully have enough air in the balloon by the time you hit 90 or 100 or however old you live, and then that's all you get, right?
Yeah. Yeah. Yeah.
And there really isn't any tax advantages to that, right? So you're not getting any type of offset of income or tax advantages. I mean, you could have a Roth contribution, and of course you get to grow it tax free and take it, or put it in post tax and then take it out tax free, or you could do an immediate tax savings, but then when you take it out, you have required minimum distributions,
Yep.
and you have to pay the tax on the way out. I understand that, but you don't really get the tax benefits of real estate. So to your question, like, I don't, if you're an airline pilot that doesn't want to do the active real estate side of things, you can get exposure to real estate via passive, right? And for folks like yourself, Todd, and companies like Spartan that take capital in to invest in real projects, real estate, or you can do an LP interest. And so, getting back to my four buckets, right? When I look at someone's net worth, I want to see 10%. This is my personal philosophy. 10% of your net worth should be in cash and cash equivalents. You know, 30% should be in the stock market or some kind of managed money fund. 30% should be in some kind of hard assets that you control, like real estate. And then the last 30% could be in managed real estate or syndications, things like that. And I think that gives you kind of a nice portfolio. And the reason why you want that real estate exposure is because when you get to retirement, you might be able to live off the cash flow that real estate produces versus having to liquidate the investments and pay the tax on them to live, right? And
Yep.
then you have a portion of your retirement account that now can be passed on generationally to your kids, and they can continue benefiting from that. And there's way more tax advantages to that type of investing versus stock. So I think, I remember being a new hire at Delta, and someone in my class came up to me and said, why do you do all this real estate? Why don't you just put it in the stock market? I mean, I made 8% last year, or whatever that person made. What's the difference between 8% in real estate and 8% in the stock market? And I was like, the tax efficiency.
Yeah.
right? We do this for that reason. And then, real estate behaves differently with cash flow and appreciation without the need to liquidate to actually, realize that cash. So I like to, that was a lot. I kind of gave a lot there, but I like to kind of bucket my personal planning that way, and then have real estate in there as a tax strategy, and know that it doesn't always have to be an active strategy. I've joked around with a lot of pilots. I'm like, you're spending a lot of time flipping that house. You realize you could go fly a trip or two extra, enjoy a 3 or 4 day trip as an airline pilot and probably make as much as you're going to make on
Yep.
that flip, you
Yep.
know?
And
But
using the skill set that you already have.
yeah, and it'd be way more enjoyable. I mean,
Yeah.
airline pilots can pick up, double time or premium trips and make tens of thousands of dollars on a trip.
Hmm.
And it's real money. And it's not even about what they make, it's about the risk they take when they flip a house, right? They
Yeah,
have to
for sure.
find the house, take a loan, do all that work, expose themselves to, lawsuits and
Yep.
contractors and
Yep.
things like that. So I'd much rather be as an airline pilot in a limited partner position than I would be, in the driver's seat doing my own deals.
Yeah. Yeah. There's so many people that want to get in real estate. And I think that they think their only method is to have to buy it, to flip it, to have it as a rental. And then they get sick of it, right? Because like you said, like, wait, you could just pick up a couple extra shifts, make an extra 20, $30,000. It wouldn't take you that long. And you're doing something you enjoy and you're good at, and you have no risk. Like you're just doing what you do every day, right? Like, you're
Yeah,
not
and I
trying
think
to.
it's important. Yeah, I think it's important to put the nail it down why pilots actually would do that, right? Because I do need to pay credence to this. Pilots have downtime, and they're
Sure.
they're they're type A, and they want to learn, and they
Yeah.
don't want to be stagnant.
Mm,
So I think pilots wade into real estate actively because bored is probably a wrong way to describe it, but they want to keep learning.
they've,
And
yeah,
so by doing something like that, they learn. And I think that's a completely acceptable thing to be going through, right?
absolutely.
I mean, I talk to so many pilots and they're just like, I'm a senior captain now. I have only have to work a trip a month, and I just want to learn. And I think that's why people have enjoyed our podcast so much, is because they get to learn different strategies and techniques and go to our conference and do all kinds of different things that allow them to continue on with their journey. So
Yeah.
it's been,
Yeah. Well, that makes
I think
sense.
it's, yeah.
I like those buckets. So if listeners, you didn't write that down, it's 30%, and you're saying like, or like your IRA, your stocks, that type of thing, cash 10%, liquid cash, something you can get at quickly. Then hard assets. You said hard tangible assets. Does that like your house? Would your house fall into that bucket?
I don't want to get into the Grant Cardone, is
Yeah,
your
yeah,
house an asset or not argument, but yeah, I would put your house in that
yeah.
because your house, you think about hard assets. Hard assets protect you against inflation,
Hmm.
right? You can lever
Absolutely.
them, you can protect yourself from inflation. I don't know why a pilot doesn't buy one short-term rental every single year. And here's why. You
Hmm.
do a short-term rental, you have the short-term rental loophole, and we talk about this a lot on my show. You can get the depreciation against your ordinary income. So you
Yep.
can, I've seen pilots, dozens of pilots that follow along with our show, save hundreds of thousands of dollars on taxes because they do the short-term rental loophole. And you do a handful of short-term rentals. Maybe
Yep.
you decide later that you don't want to actively manage them. Maybe you shift them to a long-term rental, or after you take the depreciation, you shift them to a long-term rental, or you get them actively managed by a property manager. But the point here is that you want those hard assets that if you need access to that cash, you can get it in 3 months or 90 days, right?
Yeah.
If you really want that money in your house, you could go sell your
You
house.
can go sell
You
it.
might not like the price. Yeah, you might not like the price, but you can get something back within 90 days, right? Typically, you can list it, get it on the market, you can dispose of it. Now, it's not as good as liquid cash, 10%. It's not as good as 30% in the market because let's face it, market stuff you can sell quickly too. You might not want to sell the market because you might be down or up or whatever. Now you're
Yep.
going to trigger taxes. But you know, you want to kind of start doing those things in my mind sequentially, you know, really make sure those buckets are full before you move into something like an investment with us where you're doing stuff that is highly illiquid and that you don't have access to. You can't call up Todd and say, "Hey Todd, I know we did this multifamily deal, but
Right.
I want my money back, you know,
Right.
because I have this emergency going on in my house and I need the cash." It's
Every
like,
once in a while that happens, and yeah, it's a challenge because, like you said, they're very illiquid. I mean, certainly we do our best to get them their money back, and to figure out if an investor wants to take over, or to buy their shares, but it's an illiquid asset, so it's just it's not like trading a stock.
yeah, exactly. And I try to make sure people, you know, I try to preach this 10-30-30-30 because people need to understand that, you know, this stuff that you're doing, these syndications you're doing are not are liquid.
Yeah.
And you're not going to get your money back if you're in a panic. And you know, I feel really bad telling people this, but it's like, sorry, this is an illiquid investment. If I start liquidating your investment, then I'm going to have to do it for everybody, and then all of a sudden, what's the point of doing this, right? So,
Yep.
I think it's something that investors really should be, aware of, you
Yeah.
know.
Yeah.
So,
Absolutely. 100%. Why self storage? You guys are in just self storage. Why self storage? Why do you like that asset class today? And then, well, let's just talk about why self storage and why today.
you know, I love to tell the story of how I kind of fell into self storage. I thought it was stupid, right? Let's be honest. Like I kind of thought Americans just have too much stuff, and that's like a problem that people have. But me personally, I was thinking, you know, because I like to invest in things that make sense to me.
Yeah.
And to me at the time, you know, 15 years ago, I didn't really think storage really made any sense because I was like, okay, I'm a millennial and I just like having experiences and I just get rid of my stuff, right? If I
Yep.
don't use it, I just get rid of it.
Yep.
But what really changed for me was when I was having kids. And when I sold my house, or was selling my house, my real estate agent said, "Hey, you need to put all your stuff in. You need to get all your crap out of here so I can stage your house and make it look nice." And I had to put my stuff in storage. And I was doing that because I was having children. And then when I got into my new house, we got in, we got settled, we had our daughter, and then my son was on the way. My wife and I got together and said, "You know what? We should probably renovate this house, put on an extra room, put on an extra bedroom. You know, let's gut the basement. Let's, you know, finish the basement off. Let's do the kitchen. Let's do a bunch of stuff right before the baby comes." So what did I have to do? I had to move all my stuff out of my house. Once again, put it in self-storage. And as this is going on, I put my stuff in storage, and about 6 months later, I get a rent increase of 20%. And I'm thinking to myself, what the heck? So then I start looking around. Everybody's full, no availability.
Hmm.
And do I really want to go to my storage locker on a Saturday and move all my stuff to save 20 bucks a month? No, I don't. And I was like, this is interesting. So I started looking up, you know, hey, who are the big players in this space? Public Storage, Extra Space, CubeSmart. Okay, they take up most of the market. Actually, no, they don't. They only own 10% of the market. Most of the facilities are owned by mom and pops, right? Mom and pop operators, where I
Yep.
was putting my storage stuff. And then I was like, okay, well, they're 70%. These big conglomerates are 10%. Who's the 20% in the middle? And I started looking at it and I was like, oh, SureGuard, Simply Self Storage, Life Storage, and you know, uh, Uncle Bob's was one, right? And these companies were basically gobbling up all the little guys. And then eventually they were gobbled up by the big conglomerates.
Yep.
And I was like, well, that's where I want Spartan to be. I want Spartan to be the middle guy that gobbles up all the mom and pops and eventually sells for a premium to the big institutions. And so then I was like, okay, well, let's learn everything we can about self-storage. So we went on this big, this big educational blitz, figuring out, and, Scott and I were very much aligned around, our criteria to buy the self-storage, easy to own, easy to evict, easy to maintain. And so and then I started to realize too, like self-storage wasn't really accessible. I was flying with captains on a trip and I'd be working on buying a self-storage property. And almost all of them would say, I've always wanted to invest in one of those, you know?
Hmm.
Like my buddy did it 20 years ago and now
Hmm.
he's a gazillionaire and he's got cash flow and I wish I would have done it with him. And then it was like, okay, yeah, you can for 100 grand, you can be in our next deal. And so it just kind of fit with the narrative on what we were looking for. But self-storage is, I used to think it was the 4 Ds that drove people to use self-storage. And they're all life events: death, displacement or moving, downsizing, and divorce. Those were
Yeah.
like the 4 Ds, right? At first, I was like, okay. But then once I was in the space for over a decade, I started realizing, well, it's also diapers. When you have kids, that's going to cause a storage event potentially. And then also, don't forget about disease as the 6D,
Hmm.
because in COVID, when people had to clear out rooms to work from home or have a home gym
Yeah.
or, move because, now they don't have to live in an urban city anymore. They can move out to the suburbs, or they want to move to the suburbs because they want a bigger yard. All these things create the need for self-storage. And I just like that it's a consistent flow of demand because there's always a need for Americans to shift their life. And that's recession resilient, not recession proof, but it's something that someone's always going to need. And the last thing I'll say is we looked at, how much storage was used in the 90s, right? As Americans. Americans used to use about 2 square feet per person. Now they consume about 7.
Wow. That's a big
So it's
difference.
and there's mathematical certainties around which markets have demand and which ones don't. And I just really like that. I like that there was some predictability to the cash flow, predictability to the demand. And we just wanted to get really good at executing on that. So that's what really kind of got us into storage.
So what's the future of storage? You said something that this is what I've always been concerned about with storage is I don't like a lot of crap. You don't have a lot of stuff. I feel like the generation that had a lot of stuff, extra stuff, too much extra stuff, is the baby boomer generation. Like a lot of them, and I'm just thinking of the baby
I love
boomers
this
that I
question.
know, they have
Yeah.
way too much stuff and
Mhm.
they don't ever want to get rid of it. They'll never get rid of it. And they'll never use it, but they'll never get rid of it. So they put it in a storage. But the millennials don't seem to have that same problem. And maybe that's just, again, my bias around me and some of the people that I think about. Um,
Well, let
so
me ask you this. Yeah,
is
let me
there,
ask. Oh, go ahead. Sorry.
go, well, is there a future that we see that where people used to have 2.5 square feet, now they have 7 square feet, and now do they go back down? Does it go back down to where we were in the 90s? Or where's your, tell me why I'm wrong in the way I'm thinking. Because I
Well, let
think
me
I
ask you
am
a.
wrong. I know I am wrong because I see the statistics, but like why?
Well, let me ask you a question. Which generation do you think uses the most self-storage in the industry right now?
I mean, I feel like the answer is the baby boomer, but I know you're going to tell me I'm wrong.
You're wrong, but I'll tell you why. So about 15 years ago, I was at an industry conference for storage, and there was a guy up on stage, and he was going off on what you just talked about. He was saying, you know, baby boomers are the largest population segment, and they're the largest customer base that we have. And we've got to really pay attention to what the millennials are going to do, because pretty soon the millennials are going to make up most of our population in America. And if they don't use our stuff, they don't use our storage, we're going to have a problem, right?
Yeah.
And now the talk is the same about Gen Z, right? We're all saying the same thing, as Gen Z, and we're all studying what Gen Z's, how they're using storage and things like that.
Hmm.
So I have a funny cartoon picture, right? And if you can close your eyes and imagine for a second, if you're listening to this, it's a guy with his son standing in front of a storage unit with the storage door open, and it's full of stuff, beaming like bursting at the seams of stuff. And he's saying to his son, "One day, son, this will all be yours." That is the baby boomer trying to give the millennial son their heirlooms,
Yeah.
their hutch, their crap.
Yeah.
And as you
Stuff
know,
that maybe
Todd, we
they
have
got from their grandma or,
they exactly the
yeah.
China set
Yeah.
that the millennials just don't care about. We do not want that stuff.
Right.
So now, so now the boomer is going to keep the stuff longer. That's how a boomer used storage: heirlooms, getting settled to go south for the winter or buy their condo and downsize. And they held on to all this crap, right? Eventually that's going to teeter out and go away, right? As baby boomers die, millennials come over and they open the storage unit and they go, I don't want any of this stuff. Get rid
Yeah.
of it, right?
Yeah.
And even that's a struggle because it's like, oh my God, these are all the memories. And like, we're living in a virtual world and the physical. And again, there's a Netflix documentary called Tidying Up with Marie Kondo where it is a challenge for people to get rid of things. They cry, they break down, they get emotional. Literally, it's a show about that. And I think what's interesting is millennials are using storage much differently. Millennials are using storage for life experiences, you know, stand-up paddle boards, kayaks,
Mm,
skis, snow tires. It's an extension of their home or their apartment.
mm.
And remember what happened to housing costs. Housing costs are through the roof. So
Yep.
the extra space that they might have or not have in their house, they're using self-storage for.
That makes
And so
sense.
now millennials are making up 38% of our customer base, and Gen Z is on the rise. There was a survey that actually polled Gen Z, and 50%, one in every two, plan to use the self-storage. And what's interesting is one in every three Americans has used a self-storage facility at some time in their life. And what's crazy to throw airlines into this, only one in five Americans has ever flown on an airplane. So there's more
Really?
people.
That's
Yeah.
crazy.
Yeah. Ed Bastian just got on an interview and was talking about, yeah, one in every five
Wow.
Americans have been on an airplane, and one in three Americans have used a self-storage. And so I think it's also part of like the main food group now. Like when you think about having a cell phone or driving a car or having certain amenities in your life, self-storage is everywhere now. So people kind of use it as part of their
Yeah.
normal journey, right? Like they know that they can, well, I could just put my stuff in storage for a little while, or I'll just rent a storage unit, things like that.
And then
That's
it
just the
probably goes on for much longer. They expected to do it for 6 months or a year or something like that. And then they just let it stay there. And maybe they take some stuff out, but they're like, oh, this is really convenient. I could see that happening a lot. I know it happens.
Exactly. And they get down to one or two items and they say, it's not worth canceling this. I'm just going to leave it alone and
Right.
maybe I'll use it for something else. And it's like an extension of their home. It's a garage that they have somewhere else. And actually 66% of our customers also have a garage. So that's not even really a factor in needing one or not needing one. But
Hmm.
one thing we haven't even talked about at all so far is 30% of the reasons why our customers are in our units is because of businesses
Mm.
and HOAs, right? We have HOA covenant restrictions that don't let you put your food truck in your driveway or your utility truck in your driveway or have a business on the side of a van, right? Or
Yep.
your boat and RV storage, recreational equipment. We have tons of businesses that use storage, like sheet metal contractors, landscapers, car storage. We have a lot of furniture staging companies that go in when they're building new houses or is transacting a lot of real estate in the market there. Just tons of reasons that people use it. And I think that type of economy has really taken off, right? The
Yeah,
the
for
Etsy
sure.
economy.
Yeah.
Yeah. So like your Etsy supply company or things like that. And that's why I think industrial flex, has been popular because, people want sort of that space they can store their stuff, but also somewhere they can go and sort of do business.
Do
I
business.
think, yeah, storage, you can't really operate it like a retail shop out of your storage unit. But a lot of people, like I have photographers that rent units
Mm.
and they do school headshots and different types of photography in their self-storage units. It's pretty typical, right?
Hmm.
Um, yeah, for food delivery companies. I mean, it is endless on what people use the storage for with limited options and last mile logistics. I mean that small businesses that rely on inventory that they want to get out to your customers. I mean it can be a great resource for that. So
Hmm.
there's just a lot of different uses, military deployments, kids going back to university that don't want to bring all their stuff home. That's been very popular. So just it's very diversified depending on where you are.
Yeah. So while the baby boomer that's keeping the heirloom is eventually kind of fading out, um, That's still a long ways away, by the way. Like the baby boomer generation is big, and they're
Yeah.
they're just getting to that like 80 years old age. So many of them are gonna be in these self storage for a long time. But as that's phasing out, you've got a lot of other demands that are right alongside and growing. I mean, some of these businesses and the recreation stuff they talked about, like that's growing. That use is probably just going to continue to grow quite a bit over the next foreseeable future, at least in my opinion.
Yeah, absolutely. And I always remember the story during COVID. I was flying a 737 down to Florida, and there was one person on my airplane, and I just couldn't help myself. I was like, everything was canceled. I don't know. For some reason, we were still on the board as going to Orlando. And I walk up to the passenger and I was like, welcome aboard your private 737 to Orlando, kind of jokingly. And I said, I got to ask, where are you going? What brings you onto an airplane with, a 190 seat airplane with one person on it?
Yeah.
And she said, well, my mother just passed away and I have to fly to Florida to put all of her move all of her stuff out of her home and put it into self storage so I can list the house for sale.
Hmm.
And I was like, it just,
Hmm.
goes to show, I mean, this stuff is, you always need it for something. And when those baby boomers pass away, they're going to have lots of stuff that you got to sort through and sort out so you can get that house on the market or you can move or
Yeah.
transact or sell eventually.
Yeah.
And millennials are living in smaller spaces or it's more expensive, so it's pretty
Right.
difficult to find. Yeah.
Right. Well, that's the other thing too, is I mean, like there's so many people. What's the average age now to buy your first house? Is it 42 or whatever it is? It's just going up and up and up. Right. So many of these people are living in an apartment and look, I want a paddleboard. I want skis. I want, whatever. And where am I going to store that? In my apartment unit? I'm not going to. So I'm going to get a self storage because it's much cheaper to get a self storage than it is to rent a bigger apartment unit. Like that doesn't make sense.
Yeah. And I think this new generation is less tied to areas, right? They
Mm,
move more,
good point.
they change jobs more, they have more flexibility, and I think that just begets more demand as well. So that's why I'm excited about it. And actually, we went through a period of time, and it's no secret that the housing market is correlated to self-storage, right? Because not on values, but on transactions. And so the last 3 years, it's been pretty humdrum. Like we've been sort of low sales volume in homes, and so there hasn't been a lot of moving. But we're starting to see people move again, and that means that we've seen a recovery in street rates. Street rates have started to rise again, and because of our interest rate environment and all that, people haven't built as many self storages. There's
Yep.
been a huge decline in supply. So there's just some great opportunities out there to build in a supply constrained market that has demand. Still some really good locations to build at.
Yeah. You mentioned before we started recording that you haven't been buying nearly as much as what you'd like to buy and what you had been used to buying. And that's just because of the market and what you just mentioned. But what have you been doing in the meantime then?
Yeah, I love this question because I've actually done kind of what I love raising money and finding the next deal and working with investors, but I think I'm really truly passionate about is like operational excellence. Spending time, AI obviously is the buzzword these days,
Yeah.
and you know, really optimizing our portfolio. We have an AI call center now that handles all of our calls.
Hmm.
We have a virtual manager system that is super unique. When you go to our stores, you talk to a person on a screen
Hmm.
that can manage and book units. That is way more personal than trying to figure out a kiosk that kind of looks like an ATM machine or something like that.
Right. Right.
And that efficiency has allowed us to open up stores earlier and have extended office hours because we can remotely unlock and lock our doors from our
Hmm.
central station. And so that's been a really good thing to roll out. And we just been, working on property tax reassessments. We've gone through and reassessed, most of our portfolio, right? Because values
Yeah.
arguably
Yeah.
have declined or NOI has declined potentially in some places and expenses have grown. And so that's been a big part of savings, right? Let's get a firm to come in and dispute all of our property taxes. We've gone through that and, saving, well over $1 million potentially this year on property tax
Wow.
reassessments,
Wow.
which is huge. I mean,
Yeah.
just huge.
And that's through a
Fin.
lot of assets, but you think about that each asset and it adds up. So many people just let that go, let those little expenses go. Like, okay, property taxes, I'm assessed this. Is it worth fighting? Like, a lot of times, yes, big time.
Yeah.
And we've had some really big adjustments, and sounds like you guys are too. But, utility expense, any kind of expense is like once you start adding those up, those can add up big.
Yeah, and there's been a lot of, speaking of utilities and property taxes, insurance. There's opportunities for insurance to be,
Yeah.
we've seen declining insurance expenses, believe it or not. I know that
Yep.
it's always been a hot button that they've been increasing, but there's, as the portfolio scales, we've seen a decline in insurance, and then we've also seen a decline in, not only that, but like interest rates, right? Like a lot of stuff we bought in 2023, 2024, 2025 interest rates have gotten more competitive. So we've refinanced hundreds of millions of dollars in the last year or
Hmm.
two, which is meaningful,
Oh, yeah.
substantial savings on that. And then we have maturities, right? I mean, a lot of these assets were purchased 5 years ago, so we're coming to the end of our term of our loan. So we're doing a lot of refinancing. And we've done some cash out refinances for our investors, which has been fantastic.
That's fantastic. Yeah.
Yeah, and the last thing I'll say is like fintech. We've actually, fintech has gotten AI heavy, and we've changed our treasury platform and our expense management system, and that saves a lot of money. In banking fees have gone down,
Hmm.
more efficient automation and procedures. So, you know, I hate to say it, but it's leaned up our staff quite a bit. I mean, we've laid off numerous people, not because they weren't doing a good job, but because their job is just not there anymore.
Yep.
Rebalancing cash and moving things efficiently has just become automatic. So it's been great. Yeah.
I mean that's great. It's amazing when you start to really dive into the business and get that hands on like you guys have done now over a slowdown caused it, right? If you were still buying 25 facilities a year, you maybe wouldn't have done that. But sometimes
Yeah.
a slowdown is a good thing, right? Sometimes we've done the same thing, and we took the slowdown and said, how can we become more excellent? And there's still plenty of low hanging fruit I know that we'll be able to find, but it's just those little minor tweaks to become just a little bit better and looking at every aspect of the business. I love that you guys did that and found some pretty significant savings through that. So that's awesome.
Yeah. It's been super fun. It's fun to say, to have like a thread with the team to say, hey, we just saved another $25,000 a year in property taxes on this asset.
Yeah.
Hey, we just got another, it's just such a rewarding experience because we know that translates to dollars to our investors. And I think there's nothing better than that. So got to
Well,
take advantage of whatever your cards you're dealt, right? If it's slower transaction market, if it's
yeah.
a good to transaction market, you've got to just kind of go with the wins and execute. So it's good.
What do you see as far as the transaction market, over the next year or maybe two? Is there distress in self storage where that's the opportunity? Is the opportunity to build new self storage because there's been a bit of a lag there, or what's the opportunity?
At the end of the day, there's always opportunity. There's always opportunity to find some market that's underserved. And, that's what we do. That's our specialty. We go find markets that are underserved and go buy there or build there.
Yeah.
And I think no matter where we are in the cycle, there's always a market that's untapped. Might take a little bit extra time to plan and permit. Like we just had our next deal is a deal that we spent 4 years, in
Wow.
entitlements, right? And
Wow.
and so very supply constrained. But then there's also mom and pop operators that have just decided now's the time to sell.
Yep.
And they're selling at a time that maybe isn't as frothy as years past because of interest rates and things like that. So just right place, right time, good market, got to be in the game to find that. But I would say if I had to predict, opportunities over the next 2 years, it's going to be on the debt side. Because if you think about it, debt gets deployed when equity is being deployed, and equity deployment has slowed down.
Yeah.
So now debt deployment is getting hungrier.
Yeah.
And with the core office markets shut down effectively because no
Mm.
one is investing in office,
Yep.
that money flows has completely almost turned off. And so there's these big conglomerates like life insurance companies that want to lend, but there's just simply not the transactions that they've been accustomed to get their capital placed.
Mm.
So there's a lot of opportunities, I think, in debt. We've seen some
Mm.
very attractive lending come to the table and flow into self storage because it wants a place to park money that's safe. And so I think the transaction market, like the new purchases and transactions, are definitely going to stay low over the next year or two. That'd be my prediction until people start to get excited about maybe interest rates and geopolitical events calming down and
Right.
or they're forced to sell. But I
Or the
don't see a
forced.
lot. I don't see a lot of distress in this market.
Yeah.
We have a very low foreclosure rate. A lot of the distress you hear about in other sectors have been, demand economics have changed, like office. People aren't going into an office anymore, or they've been because the debt was bad in the first place,
Yeah.
right? Like, I mean, I
Right.
think, we hear about these multifamily deals blowing up because, the operator was over leveraged. There wasn't a lot of value to squeeze and
Short-term debt, interest rates
short-term debt.
skyrocketed. Yeah. Yeah.
Exactly. And, I think the storage industry has always been sort of had a governor on it. We never really had the cheapest debt. And we never really, as an industry, over leveraged. And our interest only periods are limited, right? We don't get these really nice government backed loans. We
Yeah.
kind of get I mean, we get the bank next door loans, right? Which are great loans, but they're 25-year
They're
amortization.
simple.
They're simple loans, right?
Yeah.
And
Yeah.
I remember going back to conferences a decade ago, and I'd meet people at conferences, and they'd say, "Yeah, my debt is 2 point whatever percent," and I'm like, "My debt's like 4.25." And it's like, it sucked, but my debt was also fixed, right? And then
Yeah.
their debt was IO the whole time.
Yeah.
Mine amortized, but here's the difference. I wasn't very highly leveraged. I didn't have a floating rate debt, and my loan was amortizing. So now, as my maturities come up, I pop the hood on my deal and I go, well, this is kind of cool. Like, I've actually paid down some of this loan because I've been
Yeah.
amortizing. I didn't have to fight off cap rate or, rate caps because I didn't need them because I had
Yep.
fixed rate debt. And my refinances are not that painful because I just don't have the issues of, no, of asset values going down and in the loan balance staying high. So,
Yep.
so that's why there hasn't really been a lot of distress, I think, or one of the reasons, right, is, there isn't a lot of this, oh my God, I'm going to lose my property in, 90 days if I can't sell it. So,
Yeah. When you don't have exotic loans, it creates a lot less potential for stress in the market. And we saw that in the single family realm, right? I mean, look at the foreclosure crisis. You know, during the Great Recession, it was most of that was caused because of exotic debt. It wasn't because of somebody who had a 30-year fixed rate loan. I mean, certainly some of those, right? But that wasn't the big percentage.
yeah, I think I love that example. And I think, if we all sit back and look at some of the shortfalls of what happened, it's the fundamentals of don't over leverage.
Yeah.
I think as a market, we kind of fell into this, buy, rehab, rent, you know, refinance, repeat, and people
Hmm.
were leveraging
Hmm.
crazy amounts of debt,
Yeah.
because you could, but people weren't really factoring in, a 5.5% interest rate hike and what would happen if, rates changed or the market changed a little bit.
Yep.
And I think that's where you get into trouble. And it's easy to sit back and say, oh, you shouldn't have done that. But
Shouldn't have done it. Yeah.
it, yeah, but I mean, that's the lesson learned, right? Either
Right.
way, like I'm not going to poke holes at anybody's, investments. But I would say that's a lesson learned. I mean, it's just,
Yeah.
you make sure you don't
Certainly.
over leverage. I mean, that's the first thing that's going to ruin your deal is too much debt on it.
Yeah.
So,
Well, Ryan, we got to wrap up here. I got a couple last questions. What's a favorite book you can recommend to our listeners?
yeah, I love the book that Steve Schwartzman wrote. Um, and What It Takes is the title. And I love that book. That's my favorite book. It tells the story of Blackstone, which is the largest private equity firm in the world. and what it takes to start and run and make that place successful. I think that's just such a great
Mm,
story that Schwartzman puts together. He really had a good sense of the political dynamics, leadership dynamics, and how to, when you make a decision, move fast on it.
mm.
And just really telling the story of how he put those things together. Love that story. I actually should read that again because I really enjoyed listening to that. So
That's cool. It's cool. Have not heard that one yet on the podcast, so I have to
perfect.
check it out. All right. What are your three pillars of wealth creation?
Yeah, live every day like it's Saturday would be cool. I am nowhere near that. Like wake up every day like it's a Saturday. Like you don't have to do anything. That'd be kind of
Yeah.
cool. I would say, um, family connectiveness, right? So, do your kids know you? Do they talk to you? Does your wife connect with you? Are you, happy with um, with your relationship with your family? I think as another pillar. Um, and then I just think happiness at work, happiness at work, happiness with what you do. It doesn't have to be work per se, but if you serve on boards or if you serve in a community, are you happy with the people that surround you? And are you feeling like you're making meaningful connections are the three things.
Love it. So one of the things I used to say at the end of every podcast, and I've gotten away from this, but I used to always say, make every day a Saturday.
Yeah, I love that. I
And
mean,
and it was
yeah,
exactly why you said live every day like a Saturday, because think of your Saturdays, right? It's this, but most people are W-2, like you're off the clock, you do whatever you want. So live every day like that. Why are you only living Saturdays like that?
exactly.
So,
My mantra has always been, there's only two people in your life that you have to impress. Your 7-year-old self and your 70-year-old self. Be
mm,
proud of what you've built, and yeah, be somebody to look up to, right? Like
yeah.
if you're your 7-year-old self, if my 7-year-old self met me, would they be proud of who I am?
Mm,
And that's like just kind of a good way to kind of gut check, like, am I living the life I want to live?
yeah.
And it's not perfect, but I'm striving there every day. So
Love it. Ryan, how can our listeners get in touch with you, learn more about what you got going on?
yeah, our website is spartan-investors.com. And then you can email me, Ryan at spartan-investors.com.
Awesome. Ryan, again, really appreciate you. Appreciate you joining us on the show. And you have a fantastic rest of the day.
Thanks, Todd. You too.
Hey, thanks so much for listening. I appreciate you being a loyal listener. Say, I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out. And we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.